this edition of the Nightly News. Dr. Hill here to educate you on the differences between an HSA and an FSA. So we're doing this video because you probably don't want to read IRS publication 969 or publication 502 on the differences of HSA and FSA.
I mean, they're
accounts.
riveting. They're riveting.
Fascinating stuff. So here's the Cliff Notes. First off, just wanted to tell you a little bit about what these accounts are, and then tell you about similarities and differences and when you should use them. So first off, HSA stands for Health Savings Account, and it's exactly what it sounds like. It's an investment account actually that you use to put money in on a pre-tax basis, so it saves you on taxes, and then you can use that money for qualified medical expenses. You can actually invest the funds as well and let them grow over time, which is an awesome benefit. And then they grow tax-free, and they can be used tax-free withdrawals in the future as long as you use it for a qualified expense.
That sounded like triple tax-free.
Triple tax-free. You can put in $38.50 a year as an individual, $77.50 for joint, and so that's really great because you can save on both FICA, the 7.65% tax for Social Security and Medicare, as well as your regular Joe taxable income. So if you make $100K, you put $5K in, taxable income is $95K, you didn't have to pay tax on FICA there for that $5K. So the FSA stands for Flexible Spending Account, and it can also be used for qualified medical expenses, but it's also useful for dependent care. Same pre-tax money coming in. You can put in $3,050 for healthcare costs, and then the dependent care is $2,500 for individual, $5,000 for joint. So they're similar accounts in a lot of ways. They both, like I said, reduce taxes. So again, you put $5,000 in, your taxable income drops, and you're not paying federal income tax or FICA on whatever you're contributing. So it's awesome. And they're both useful to pay for qualified healthcare costs. But there are some unique differences.
Well, hi there. So the differences are a couple things. So if you invest in the HSA, they're amazing. A lot of people would argue that they're the best types of savings accounts out there. So why they're amazing is once you put that money in, that $7,750, if you've got a family or jointly filing, then you can keep that for the rest of your life. You're not required to spend it in the year of what you put it in there. And FSAs differ immensely on that. It's a use it or lose it policy. So if you do not end up spending the FSA monies that you have put in there, then the company will take it back. Sometimes they'll extend it like a grace period a couple months into the next year. And they're great perks, but I always use those when you calculate the cost of what you're forecasting for the year, and you don't just put money in there blindly because you don't want to lose that money. And so they're a huge benefit. But for HSAs, they're amazing. Like we said, triple tax-free. I would highly consider those if you have the ability to do that. The one caveat on it is if you do not have a insurance plan, medical insurance that's a high deductible plan, you're not going to qualify for it. But if you do, then they usually make sense. Can't always say that. It's usually case by case. Love to talk to you about it. And FSAs, again, what I would do is let's take some time to forecast out what you are foreseeing the cost to be for the next year, and then we can back into the number that we can use there.
So HSAs, FSAs, fascinating stuff.
What a tasty bit of information.